Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media like we normally do. I'll interject my financial opinions as we go, and it's generally related to three different topics: wealth building, financial topics, and or commodities. Let's dive in. Let's see what's going on and what people are sharing. If you want to follow me, it's at finding_finance. And if you want to join our community, finding-value.com. We do have a 7 a.m. Sunday question and answer session going on. It's at 7, not at 5, because of the Super Bowl that some people had basically asked me to change. And I'll easily do that for you guys. So, Oren says, look at this chart and tell me there's no manipulation in the price of silver. The price is slammed down almost on on a daily basis whenever the COMEX opens. No rational trader who is trying to get the best price for their metal would sell at this exact time. 10 a.m., 10 a.m., 10 a.m., 10 a.m. Look at the big moves lower, all at 10 a.m. Is there manipulation? It sure looks like it to me with this repeated pattern that is going on, but I'm still going to be long silver because this is the very thing that scares the crap out of them. It's the thing that will protect you against them, and they know that. So of course they're going to try to do something with it, and eventually the markets are they're gonna roll them, guys. They're giving you an opportunity to buy the metal cheaper for longer, and then all of a sudden it's probably going to do some large gap up when the market runs into an actual physical shortage. When will that time be? I don't know. If you had $300,000 invested by 35 and make $100,000 a year, would you buy a Tesla? Well, I have more than this amount invested, and I have made way more than $100,000 a year in total, and I do not own a Tesla. I actually still own the original cars that we purchased in 2004 and 2005, and I've got two sports cars that I bought at the bottom of the market, and that's what I've owned ever since 2004. I bought I bought a 2005 Chevy Aveo. I bought it for 7,000 something dollars new, and I still own that car, and I still drive it as my as one of the cars I drive on a daily basis. My wife bought a 2004 Honda Civic in 2004, and we still drive that car. That car is pretty beat up, but it's still going. We've got 210,000 miles on it or so, something like that. And if I was, presented with the opportunity to buy a Tesla, I would not buy a Tesla. Why would I not buy a Tesla? I am deathly afraid of how long that battery will last. Number one. Number two, I think that spending 30 or 40 or 50 or $60,000 on a car is absolutely insane. The most I've ever spent on a car myself was a 1993 Mazda RX-7 that I purchased for $12,000 back in 2011. That's the most I have spent on any single purchase outside of my house. So the most I've ever spent in one go is $12,000 on a 93 RX-7. It is now worth, I'm going to guess, 40 or 50 grand, probably. It's got pretty low mileage. It's in pretty good shape. Very good shape. Very good paint. Very good. It's a single turbo. I did all that stuff. I also bought a $1,200 RX-8, and I put the engine in it, and the engine was $2,950. I put a Mazda remanufactured engine in it myself. I also put a Series 2 transmission. So, I mean, when people talk about if I had this amount of money and whatever, guys, it doesn't matter. You don't want to spend any money on liabilities. And I love cars, guys. Like, I am the biggest car guy that you can find. And all I want to do, if I were to make an ideal car, and I might do it still, I just don't know if I want to do all the work to it. But I think an RX-8 chassis with maybe a 13B REW would be a pretty cool. setup, or putting in like a K20 tweaked out to the max NA in an RX-8 would be pretty sweet too. But I just don't. I've been in Teslas. I don't want to spend 50, $60,000 on any car. Doesn't matter what it is. It's just it takes money away from you. Platinum price. Every single analyst sees 2024 prices above the current levels. And I know he's looking around. He's going out and looking to see the price of platinum and palladium, and he's invested in Sabanier and stuff like that. But guys, I'm not worried at all about the price of platinum or palladium. I think it's an absolute steal of a deal at this time. It doesn't mean that we've bottomed yet, but I think we're real close. And I think with what potentially is coming, a lot of people think that EVs are going to take over the world. I think that we're going to have shortages of materials, just like Toyota thinks that we're going to have shortage of materials. And they're going to make hybrid vehicles, which requires catalytic converters at higher loadings in those catalytic converters. And what's going to drive it is the shortage of materials and the volume that they cannot make. So electric vehicles cannot, and I will repeat, cannot replace the majority of cars on the road because we physically don't have the materials to do it. So why would someone bet on that? Because they don't know about the limitations of the physical materials. And what's going to come is we're going to build hybrid vehicles. And a lot of these areas, the grids can't handle all these electric vehicles. Third world countries, heck, even USA, I don't know if our grid can handle it. We just all started charging electric vehicles. Here's Warren Buffett. He says, good investors are data driven and enjoy the game. They are people doing what they love doing. It really is a game they love. And what I always say is, the game taught me the game. If you're in the game and you're playing it all the time and you're paying attention, you're going to change to what the game is. So the game is going to teach you the game. And I like doing it because it gives you there's big rewards for learning the game. And it's a multifaceted deal here because you have to improve as a person, your personality traits, being a patient person, eating your words, eating humble soup, so to speak, at some point, and then refining yourself and refining your outlook and your strategies for the game. It's a fun game. I mean, that's why I do it, is because the rewards are big and it provides a challenge. It gives you something to think about. I could spend all my waking hours trying to figure out designs on things, but for the most part, if you're working for someone else, it doesn't pay you anything. There's no big reward at the end of it. So I think having the reward and the payout is really what drives me to some extent, and what makes me love the game, because it's a game that you can play with big rewards if you get really good with it. Breaking at JP Morgan, Marco Kalanovic keeps warning about tech stocks being overvalued, but the trading desk is now taking a tactically bullish stance on U.S. equities. I would agree with Marco. It is very overvalued, and you have to look at everything from a risk-reward perspective. Now, some of these firms are going to be chasing performance because their performance is being measured against other people's performances. But I'm not in that game. I don't have anything to do with that game. So I'd much rather go where the value's at and sit and park my money where value's at and just wait for the money to rotate over. That this game where you're chasing price performance is a very dangerous game. And a lot of people get burned when the markets turn against them. This January research piece says the catalytic converter market, every catalytic converter uses 5 grams of platinum group metals, is supposed to increase by more than double over the next 9 years. So the hybrids are going to put a lot more loadings of rhodium, palladium, and platinum. Everybody thinks platinum and palladium are dead due to EVs. Yeah, that's totally not the case. Um, what's going to make it even more, uh, how can I say it, even more surprising for most people is not just the loadings increasing, but more cars are going to be built that are hybrids than EVs will ever be built because we just don't have the materials. And that's one of the things that I don't think people are considering. We're more dependent on oil than what most people think, and catalytic converters will be used to scrub the exhaust to make it cleaner. In the long run, investing is about value and the expectation that eventually price will catch up. But in the short run, it's about psychology, emotion, and popularity. In the short run, it's capital flows that have the most profound impact of all. And that's completely correct. I came up with the three pillars: market conditions, ratios, and technical analysis. And a lot of that tries to figure out when capital flows are changing. It also gives you an objective way to figure out what is cheap, where the value is in the market. And then with the ratios starting to move against each other, you can see the money rotating between sectors. But sometimes that money rotation isn't where the value is, and you have to wait. So he's completely correct. Capital flows dominate the short term. And eventually, when the right market conditions swing back around, capital flows will come into the undervalued sector where price will eventually catch up. He's completely right. Like clockwork, here comes the money growth. So money supply growth and then the Fed funds rate. You can see that the Fed funds rate, he probably has this inverted to some degree, but it's about to come up where the money supply growth is probably going to kick into gear here. That's good because that's credit expansion, and we've got a lot of supply problems over on the commodity side, and that's what's going to go up, in my opinion. A December article from David Davis, a South African metals expert now in Singapore who did his PhD on catalytic converters, catalytic reduction and decomposition of nitric oxide in the 1970s. So let's see what he has to say. He says, my calculations imply that platinum quantum of the AGI in Western Europe and the UK have entered a critical red zone. Support can only come from the USA's AGI at a price or from an increase in primary mine supply, which is in decline, or from a significant increase in recycling, which is unlikely. These trends, I therefore expect to ignite the price of platinum within the next few months. That's what he's saying. Global and regional platinum above ground inventory from 07 to 2022. Look at the inventories drop, guys. We've got China, USA, Western Europe, Japan, and ROW. Some of these are at very critical levels. What generally occurs is that demand outstrips supply. You run a deficit. The deficit eats through the inventory levels. The inventory levels get to a critical level, and then the price starts to really move. That occurred in palladium from mid-2000s all the way till 2022, 2021. So that's what's occurring. And right now, we also have Russia that's basically dumping palladium and platinum to raise cash for a war. So here we go. And I think this is Russia, ROW, I think. Coming on back, we've got a few years ago, I read about a study conducted by Fidelity on its client brokerage accounts. The study tried to identify the best performing investors at the brokerage by reviewing account returns. They came to a stark discovery. The best investors were either dead or had forgotten to log onto their accounts for a long period of time. It makes intuitive sense that accounts where investors do little trading would do better than accounts that are more active. And I have tried to implement as much as I have into my strategies that aligns with this and also Warren Buffett's approach and Peter Lynch. Basically, you find where the value is in the market, and I can identify that using ratios. I can identify that using technical analysis and fundamental analysis. You go to where those sectors are really cheap, you buy them and then you wait. You pretend like your account or that position is dead. and you and there's times where you might be down 20% or 30%, and I invest more money into it and I continue to just hold. That's where I get my biggest gains, is where I get a really good entry point. I enter in with a good chunk of money of some portfolio allocation position size, because that's what limits my risk. And then I just hold. I hold for the entire bull market. I pretend like it's dead. Blind Luck says, I could lose everything today and I'd still be better off than 25% of Americans with a negative net worth. Dave Ramsey is for these people. I just thought this was funny. Yeah, I'd be better off if I lost all of my, I guess, savings than probably most people if I think about it. I've set up my income. Now my savings is part of my income because that's what's giving me dividends and stuff. But if that money I couldn't take out, let's say it was gone, but I kept my income, I'm not pushing the budget at all. So I don't buy new cars. I don't take out loans. I don't do any of that stuff. So I'm pretty conservative. So even if I lost some of my stuff, it really wouldn't impact me to the degree that it would probably flatten other people. Another relationship is breaking down. Throughout history, a spike in the percent of banks tightening lending standards in the blue to the degree we just saw has been consistent with unemployment rate, the orange, picking up markedly. Not the case as of now. So we've got a little bit of divergence going on with bank lending standards and unemployment. A little bit of a divergence compared to history. Bitcoin, tulips, and NVIDIA. History doesn't repeat itself, but it often rhymes. Do these charts all look similar? They do. They do. You got this little lead in and then the big move, the lead in, the big move. And you could even say that this was a bubble at 300. You can see, and when will this bubble peak? I don't know. And why does Bitcoin use a gold coin to represent itself? Why does it do that? I don't know. And why do they call it a coin? Is it because they need that recognition from the market? Hey, look, this is gold. Own these digital gold coins. They're just zeros and ones, guys. Just zeros and ones. Natural gas prices have been in a complete free fall for the last month. Since January 12th, natural gas prices are officially down 40%. Today, natural gas hit its lowest level since September of 2020. Warmer than expected temperatures have dampened demand for natural gas, and inventory gluts are building. Some good news for commodity inflation. And I think that we're probably going to bottom out at some point over the next couple of months. That's my guess. But it is low, and we do have a glut at the current time. Calvin says, summary of platinum bullish, bearish arguments from 20 analysts. So let's go into the platinum bullish and bearish arguments. The 2024 deficit is expected to be 5% of demand. That's actually pretty big. At 4-year lows, nearly all above ground inventories in China, many mines operating below break even, which is your cost curves, and we're below the cost curve. Russian smelters entering maintenance, modest demand improvement, tighter emission regulations. Hybrid vehicles have strong loadings to reduce emissions. Completely agree there. Power constraints in South Africa, restructurings in South Africa and North America, along with falling production in Russia, will further limit supply, and hydrogen supply adds new demand center. Here's the bearish arguments that they can think of. Global economy is weak, long-term transition to EVs, German auto output continues to weaken, high interest rates, jewelry demand not growing, and possible investment liquidations. So there's the bullish and bearish arguments for platinum. Let me know where you guys stand in your platinum argument. Are you more on the bullish camp or are you more on the bearish camp, and why? European wind giant Ørsted is out with another shocker. Dividends suspended for 23, 24, and 25. It exits several markets, including Norway, slows down projects elsewhere. Guidance for wind installation cut by 30% for 2030. Job losses 800 and the chairman is out. Wait, I thought this was our future. How is this so? How did they get this so wrong? Is my question. And how did I know that this was not going to pan out? How did I know myself that all this thing is a collection of commodities and a lot of them? Yeah, their price is determined by the price of the commodity itself. Just wait until commodity prices really go up, and we'll see where a lot of these renewables stand. Comparative inventory analysis for 2724. Total commercial petroleum stocks drew 4.4 million barrels of oil equivalent to the lowest level since April of 23. The fair value of West Texas Intermediate is $81 a barrel or $7 undervalued from today's price. First quarter 24 bullish to date in total stock change compared to recent Q1. So we've got a bullish setup in terms of how much inventory and where the price is of West Texas Intermediate. We're undervalued by $7. Here's EIA weekly oil report. Total U.S. inventories are not following last year's trend and are lower than all of 2023 and most of 2022. Total U.S. oil inventories are at the lowest since 2004, except for 2 weeks in 2022. There's our 2024 total U.S. oil inventory compared to the last 5 years. Well, 4 years. And we are below all of it. Bullish. People's time preferences are so short that they don't care about the arithmetic equation. They care about whether a 20-cent stock is going to 22 cents. They don't give a damn about reality. They care all about perception. Those people are my normal victims, is what he says. I play the long game, guys. I don't play the short-term market movements. So when I say a commodity is bottoming, it might go through the bottoming process for a few months or 6 months, or maybe even 3 years. I accumulate in that time, and then I ride it for the decade that's coming. That's how I make all my money. That's how I've made it in the past, and that's where I've had the most success. So wherever I have the most success, I just double, triple, quadruple down on it, on that strategy. It says you ask people to spend more money to get a car to have the same function as an internal combustion engine car. Why should they spend more money? Tell me, says Total Energy CEO. I don't know. I've got cars at work. I'm not spending anything. McDonald's is telling us that lower income consumer is struggling versus Chipotle. CMG says all is well. And I haven't eaten at McDonald's personally for, I don't know when. I know my kids go there once in a blue moon, but I haven't personally eaten anything from that place for probably at least 10 years. I've eaten at Chipotle because I think their food is far healthier than McDonald's, and I like the way it tastes that much better. So, in terms of the quality of the food and the price that you have to pay, I think Chipotle is by far a better value compared to McDonald's. And that's what I think is occurring. We've got Warren Buffett insider trading alert. Warren Buffett is back with another massive purchase of Occidental Petroleum. Berkshire Hathaway purchased 4.3 million Oxy shares for a total investment of more than 245 million. Berkshire ownership stake is now more than 28%. He's buying it up, baby. And I agree. I think oil is a really good spot to be looking. He says, I'm going to keep updating this silver chart because I feel like it's going to play out. Big move coming by end of year, in his opinion, for silver. And I could see it. I definitely see a big move coming for silver. Natural gas just crossed below $2 a million cubic foot. In basin pricing, closer to 150. Threshold for economic curtailment for older Tier 2 assets on variable cost. Every time natural gas has dropped below $2, it and gas equities have had a rally higher in the following 12 months. I think we're getting close, guys. I think we're getting close. Some people need to be proven right. That's all they're interested in. It's weird. I just want to make money. Being right doesn't matter. I just want to find favorable risk reward opportunities. That's all I'm interested in. How about you? He basically said exactly what I think. I'm just interested in risk reward. I don't care if I'm right or wrong. And I'm not going to be right on every single pick of a company that I'm going to invest in. But the way that I structure the portfolio, what I overweight, position size, all that stuff, it's worked, and I continue to use the strategies that have worked in the past. I don't care about being right; doesn't matter. Um, Modi noted that India's primary energy demand is likely to double by 2045, and the country's GDP growth rate was more than 7.5% in the first 6 months of the current fiscal year to March 2024, much higher than what has been estimated regarding global growth. We've got a lot of demand coming. We're in the S curves of a lot of these third world countries that are growing energy consumption quite dramatically. We've got so this is the Pring inflation index. So we've got a big consolidation, one hump, two hump, three hump, a breakout, a back test. And now we broke the pink line breakout back test. So what he thinks is since now is the pink breakout and back test, the second inflationary wave is soon here. Getting prepared by making use of the glorious commodities bull market should be a priority. And I think we're going to see a big move in inflation. I think it's going to be driven by something that the Federal Reserve does with credit creation, or lowering interest rates and credit gets created by loans from the banking system against those new homes that are being built. It's coming. And that's what I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel if you haven't already. And we'll catch you guys next time. This is Finding Value.